In the realm of project management, keeping a close eye on finances is just as crucial as tracking tasks and timelines. Understanding where your money is going, how profitable your projects are, and maintaining a healthy financial outlook are vital for sustainable success. This is where robust accounting software like Sage Intacct comes into play, offering powerful reporting capabilities to provide these critical insights. For project managers and finance professionals alike, grasping the different types of reports available is key to leveraging the full potential of the platform. So, let's delve into the 3 fundamental categories of reports you'll find within Sage Intacct. Think of Sage Intacct's reporting system as a well-organized library, filled with different types of documents designed to answer specific financial questions. Just as a project manager needs various reports to track progress like task lists, Gantt charts, and resource allocation summaries, financial stakeholders need different lenses through which to view the financial health of the organization and its projects. Sage Intacct thoughtfully categorizes its reports into 3 primary types: financial reports, operational reports, and custom reports. Each category serves a distinct purpose and provides unique perspectives on your financial data. 1. Financial reports, the foundation of financial understanding. Financial reports form the bedrock of financial accounting, providing a formal and standardized view of a company's financial performance and position. These reports are often used for external stakeholders like investors, lenders, and regulatory bodies, as well as for internal strategic decision-making. In Sage Intacct, this category encompasses the core financial statements that paint a comprehensive picture of your organization's financial health. The most prominent financial reports you'll encounter in Sage Intacct include balance sheet, often referred to as the statement of financial position. The balance sheet provides a snapshot of a company's assets, liabilities, and equity at a specific point in time. It adheres to the fundamental accounting equation: assets equals liabilities plus equity. For project managers, the balance sheet can offer insights into the company's overall financial stability, which can indirectly impact project funding and resource availability. It helps understand the resources the company owns, assets, what it owes to others, liabilities, and the owner's stake in the company equity. Imagine it as a photograph of the company's financial standing on a particular day. Income statement, also known as the profit and loss (P&L) statement. The income statement summarizes a company's revenues, expenses, and profits or losses over a specific period. For project managers, the income statement can be crucial for analyzing the profitability of individual projects or service lines. By tracking project-related revenues and expenses, you can determine the financial success of your initiatives. It essentially tells the story of the company's financial performance over a period, showing whether it made a profit or incurred a loss. Think of it as a video recording of the company's financial activities over time. Statement of cash flows. This report tracks the movement of cash both into and out of a company over a period, categorized into operating, investing, and financing activities. Understanding the cash flow is vital for assessing a company's liquidity, its ability to meet its short-term obligations. For project managers, a healthy cash flow ensures that project-related expenses can be covered and that there are sufficient funds for future endeavors. It reveals how the company generates and uses cash, which is critical for understanding its ability to pay bills and invest in future growth. Consider it as a detailed log of all the cash inflows and outflows. Statement of retained earnings. This report details the changes in a company's retained earnings over a specific period. Retained earnings represent the accumulated profits that have not been distributed as dividends. While perhaps less directly impactful for day-to-day project management, it provides context on the company's overall profitability and its capacity for reinvestment, which can indirectly influence project funding. It shows how much of the company's profits have been kept within the business over time.